Joining us now for the Trader Rundown is Todd Bubba Horwitz, taking a look at this big tech earnings day. Happy to have you on the show.
Huge day today. Amazon, Google, Microsoft, Baidu, we got them all.
Got them all. So let's start with Amazon.
Amazon, look, Amazon's been under a little bit of pressure recently. It made one more pop over 1,000, came back down. This report they should beat based on everything else that's on the street. I would expect them to go higher, and I will be looking for a spot to short this stock now. Not because I don't like Amazon, I just think that, again, I believe they're a little bit overvalued right here.
Google, also known as Alphabet.
Well, Alphabet is strong, but they've had a few problems the last few years. After they hit 1,000, they've now come back significantly as well. I would play Google the same way. Basically, I'm looking to sell them all, but I think they'll beat. I think they'll be in good shape, and I think they'll run. And I think after the run, I think, they got big expected moves, both of them over $60 or $70 each.
So we'll see if that happens. But I think Microsoft is going to be the one to watch.
Oh, I think Microsoft is now. Microsoft is different. They'll beat. I'm sure they'll beat. And they've been, they've reconformed themselves completely from a company that was down in the dumps that couldn't do anything right. All of a sudden, make a new high after new high, and I think they're actually almost warranted to be up here. Them, I wouldn't be in such a hurry to sell.
Right, a lot of call buying in the market ahead of this earnings report.
I think that they're in really good shape fundamentally. I think that they've made that whole changeover, which I think Apple's gonna have to do soon, and which IBM is trying to do now, but I think they've made that whole changeover ahead of everybody, and I think now their whole company has a lot of meaning again versus what had happened to them the last 6 or 7 years before.
Now you mentioned Baidu. Is that still popular with traders? It's basically the Chinese version of, say, a Google.
Yeah, no, it's a flyer. So yeah, traders like it because it's got a lot of volatility. It'll whip around, and it's got an expected move of about $17 or $18, on a $250 stock. So it could be some excitement, and of course we like to trade it. It's fun. As traders, you want as much volatility as you can get because that's where you can really make more money.
So I call this a trading vehicle. It's one of those things where the big guys are in, they're out. It just kind of can, as you say, become very whippy at times.
Yeah, it's very similar to like almost a Netflix. It really makes big moves out of nowhere for no reason, and the volatility kind of helps you price it in, and that's where you get these wild movers.
Thanks for coming on this show. We have to move on.
Great to be here.